Hey guys, Tyler here. Welcome back to another video. In this one, we're going to be talking about should you buy or wait. I've been asked several times on this topic with everything that has been happening. We've had rising interest rates. We've had inflated home prices. We have the you-know-what going on in Ukraine. We got inflation going on all around us with everything going up, gas prices. Should you buy now or should you wait? So in this video, we're going to be going over the good and the bad. There's some good news and there's some not so good news. And we're going to start with the not so good news first. And unfortunately, some of the data that I'm going to be sharing with you right away is going to be really hard for first-time homebuyers. If you're a first-time homebuyer, some of these numbers are going to be very depressing. Just from experience, when I see people look at numbers and they see where the values were and where they are today, it can be very, very discouraging, but there is hope, and I'm going to share some of that at the end of this video. So I first want to start off with an article that was shared with me that I came across that monthly mortgage payments on recent home purchases are significantly more expensive. And this is really interesting because they go through, share a couple graphs, a couple detail points, and at the end, you know what? Let me just show you here. Okay, so typically here's the rise in the interest rates. We saw that basically FHA increased more than any other one from the starting point on the first half of 2020. And this graph right here shows us the increase we see as far as home sales prices, this yellow line, and then the blue is starter home prices. And starter home prices is very important because this is affecting first-time home buyers more, honestly, than people that are buying their second, third, or are in a luxury market. What was interesting is some of what they share here. FHA financing reached $1,700, up $282, or 19.7% from the rates just prior to the onset of the pandemic. VA loans, they had double-digit increases, rising $176 or 13.3% from pre-pandemic levels, and conventional loan payments only went up 3.3% or $57 per month, likely due to the fact that these people are able to put larger down payments down, or it's their second house, so they have the monthly payment lowered. Here is what was interesting. On an annual basis, rising monthly mortgage payments mean that those who bought a home in 2021 will pay an additional $300 per year if the home was financed with an FHA loan. These home buyers will pay an additional $101,000 over the next 30 years. VA loans will pay an additional $63,000 over the life of the loan. If you're getting a conventional loan, it's based on $20,000 extra dollars over the life of the loan. And I decided I wanted to give you guys a comparison on what type of affordability you would have had then and where it is today. I wanted to put together if someone could afford a $300,000 house. That means your monthly income is somewhere around $5,200 per month, plus your liabilities, plus housing expenses. These are just nominal expenses that could change in whatever situation that you may be in. However, here's what's interesting. Right now we're at 3%. Based on this, with a $5,200 a month salary, you could afford a $300,000 house. However, the moment you go from 3 to 4 to 425, look at this. Your affordability drops $55,000. Last year in 2021, we saw appreciation of almost 20%. That means on a $300,000 house, homes are increasing approximately on a $300,000 house, $54,000. So not only did your affordability drop $50,000, but prices increased $54,000. That's a spread of $104,000 that you now can't afford from just over a year ago. So let's go back to that article and look at the amount of interest that you would be saving if you would have bought then compared to the amount of interest you're going to be paying over the course of 30 years if you were to buy today. So on a 30-year loan, $300,000 at 3%, your total payment in is $455,000. Your total interest is $155,000 approximately. And that is at 3%. Now that was back just a year, back in July. Now, if we bump this number to where interest rates are right now, your total interest payment it goes to $231,000. That's an increase of $76,000 of interest you would pay over the life of the loan simply because you didn't buy last year and you chose to buy this year. Should you buy now with where interest rates are today, or should you wait? Does interest rates have the potential of going higher, or do they have a chance of going back down? That's really what you need to decide now that, one, you know affordability, the difference is $100,000, and in addition to that, the amount of interest you're paying is $76,000 from just a year ago. That's crazy to even consider buying today. But really, is it crazy? So to help us decide if it's really crazy to consider buying right now, let's take a look at interest rates. Obviously, we see interest rates have gone through the roof where they are right now. However, this is only over the course of a year. If we just bump it out to 3 years, right now we're at levels of where they were just 3 years ago. If we go to 5 years, we can see that the highest peak so far back in 2018 was just under 5% on a 30-year fixed loan. If we go over the course of 10 years, we see that right now interest rates range from anywhere from 4.5% to 3.5%, and it went up and down within that 1% range. And that's been over the last 10 years since we've seen that. So really, where interest rates are today is in line with where they've been approximately the past 10 years. But when you just look at where we were, the historically low interest rates, it's extremely depressing, but it's not as bad as it may seem if you look at the bigger picture. The other thing you need to consider is where income has gone. 2016 to 2020, it shows that the median household income increased to $64,000, almost $65,000. This is an indication that not only have pay increased, but that overall there is actually less poverty than there has been in the prior years. Approximately, it went down to 12.8%. Down from 15.5%. So this is an indication that things are still improving for a majority of the nation as far as financial stability and the ability to purchase something. Now, if trends continue the way they are, really, nobody's going to be able to afford anything. So is it going to continue this way, or should you consider buying right now? Back at the beginning of the year, we expected, Redfin, myself, many others expected interest rates to be somewhere around 4.5%, the mid fours, upper fours by the end of 2022, where we're still in the first quarter and we are seeing rates at 4.16 as of today. So my expectation is that interest rates are gonna fluctuate right under 4.5% through the rest of the year until we have there's one catalyst that I really want to talk about, and that's gonna be around August and September when we get CPI data from the Federal Reserve. Based on what we get from the Federal Reserve at that time will help us determine if interest rates are going to go up even higher or if they could potentially go down. If we see inflation go down as a reading of the CPI, that is good news for interest rates. We're probably going to see interest rates drop around that time. However, if inflation is continually out of control, then we're going to see the Federal Reserve implement another 50 basis points that could actually cause interest rates to go up even further. The last unknown is with Ukraine. Depending on how long that conflict goes on there, that could affect interest rates. It could affect inflation, which at the end of the day could affect the CPI readings in August and September, which at the end of the day is probably going to affect interest rates. So we're going to have to keep an eye on that. If you are a first-time home buyer and you see these numbers, it can be disappointing. However, they're not as bad as it may seem. If home values continue to go up, you're going to be priced out even more. My suggestion is to make sure that you're in a financial position that you can afford a home. If you are, I would encourage you to potentially purchase a home or look at that now. Now the question is how can you get the best rate? Where are you going to go? What bank should you talk to? Well, I just made a video right here that goes over the two most important things you need to consider when you're talking to different banks to make sure you're saving thousands of dollars at the end of the day on interest, because we know that you could end up paying a lot of interest over the course of 30 years. If you like videos like this, consider subscribing. I appreciate you all, and we'll see you in the next video.